Good evening, good afternoon, good morning, wherever you're watching or listening to us from. Welcome to Stalker Team, the Investors Channel. Today, the 5th of February 2025. Today, before we move on, we'll just give a short disclaimer. Every information shared on this channel is for education purpose only, so consult your financial advisor or do your due diligence before making any decision. On that note, we welcome everyone again. Please subscribe to this channel if you haven't subscribed. We love everyone who have been supporting us, following us, putting on your notification bell. Also, you can still join our community on X. That is where you get all the breaking news, all the earnings report, earnings alert, and serious analysis about what's going on the global financial market, especially the equities market. So please follow us on X at Stalker Team Live on X. Today we are talking about the mega pullback. Yesterday, Google released their results. The stock actually pulled back in the after hours of trading on Wall Street by about 6%. Today, roughly about 6-7%, Google has pulled back. Amazon, on that news as well, has also pulled back about 2 to 3%. You could also see that Apple also pulled back as well because of some specific headlines that is special to Apple itself. We're going to be discussing all of this today, especially the top mega stocks. So we're talking about Apple, we're talking about Google, and we'll also be talking about Uber Technologies as well, which is one of the Magnificent 7 stocks on Stalker Team. We'll be talking about Amazon, like I said, and I have a surprise mega cap stock that I'll be talking about that has been doing very well since the beginning of this year. So stay tuned, stay with me, and let's jump right in. So the first mega cap stock that we'll be talking about today is actually Alphabet. Why did Alphabet, or Google, which is the parent company of Google, why is this stock pulling back? As you can see, the stock is down right now in the active trading about 7%. Yesterday, Google came up with its results for Q4 2024, and the result actually beat on the bottom line, but the company didn't actually beat on the top line, which means the revenue of the company was actually a little bit below, just a marginal miss on the estimate. The major part of that result that wasn't really positive for the market, for analysts on Wall Street, was the actual miss on the cloud side of the business. So you agree with me that the entire AI boom and AI hype that Alphabet is banking on to really rake in a lot of revenues and also a lot of net income in the nearest future. It depends so much on the cloud aspect of things, and if a company that is relying on the cloud side of things to rejig and make the cloud business, the AI business, to be very viable, missing on that part of that business, missing the estimate in terms of revenue is a negative one, which is actually a thing of worry to analysts and investors and shareholders. So you can see Alphabet is pulling back by 7% on the back of that result yesterday. But what is my verdict? I think you will be surprised that today on Stalker Team we are upgrading Alphabet to buy, and Alphabet we are putting a rating of market perform, not necessarily outperform, but it is buy and also market perform. Why do we think Alphabet is a buy? If you look at the last 6 months, you will look at this stock and you actually know that this company has what it takes to take advantage of the AI boom, rejig the cloud side of the business. Alphabet announced yesterday that they will be investing close to about $70 billion, just $10 billion shy of what Microsoft will be spending. So that is quite significant looking at the business that Alphabet has, the YouTube and Gmail, Google Search, which is the backbone of the business, and every other services that this company actually provide on the advertising side of things. So we believe Alphabet has now gotten to the point that the stock can only go further. So in the next couple of days, if you want to buy Alphabet, you can just average into this stock. The next mega cap stock that I'll be talking about that actually pulled back, I'll be talking about Apple next. So the story for Apple is a bit different, and if you look at the 1 day chart of Apple, as the trading is still going on Wall Street, is down by about 1%. At the beginning of the market trading, trading activity, it was down close to about 3%. But look at this stock in the last 1 month. It's been a significant drawdown in the value in the market cap of the stock. Yes, we saw a huge bump during the announcement of DeepSeek AI, and how the large language model actually beat OpenAI ChatGPT hands down. But what is going on with AAPL, or Apple for short? Apple has now come under the crosshairs of the Chinese authorities. There was a breaking news earlier today that Apple is now under investigation for anti-competitive practices, especially on the back of its App Store charges. Apple takes about 30% charge on every sales, or every goods and services that you actually sell on the App Store, which is a huge cut for a whole lot of merchants. It's been a big problem, a big controversy for Apple outside of China, especially in Europe. But China is doing this not necessarily because they want to tag along with what Europe is doing. It's a retaliatory move. It's seen as a retaliatory move against the tariff levied by President Trump. China also announced further investigation into other American tech companies. So for Apple, it's seen as a very negative one, given the fact that Apple has not been able to launch Apple Intelligence in China. What do we think? Apple is still a buy. We still believe Apple will outperform, and Apple's rating is a buy. Apple's rating is a buy, and I'll repeat again, it's an outperform compared to Alphabet, which is a buy but a market perform. The next mega stock I'll be talking about is Uber Technologies. Uber Technologies is one of Magnificent Seven stocks on stock team. However, today Uber is down by 7%, as you can see in the live trading. The company did very well on both the top and the bottom line, but looking at some specific items that the company mentioned in the analyst call, there was actually a drawdown on the net income because of the stronger dollar. And you also know that Uber has a global business. Uber is actually operating in almost every continent apart from China. And they also have investment in Chinese ride-hailing companies. So it's not a negative one, but the major part of that report that really wasn't sitting well with analysts was the softer outlook. So the outlook is basically the projection of the bottom line and the top line revenue or net income that the company is projecting to actually make in the new year. The estimate was a bit below what analysts are actually looking at. I won't go into all the numbers, but what you actually need to know is, why is this stock down? Is there a material defect in the company, in the business model, in the finances of this company? It is a big no. So Uber is still a buy, but we believe it will market perform. It's a market perform rating, which means it's just going to perform vis-a-vis the same level with its peers, especially in the mega cap side of things. Also, Amazon is the last mega cap stock that we'll be talking about in terms of pulling back, and there is a surprise mega cap stock that I'm going to also talk about. Now, looking at Amazon, Amazon doesn't necessarily have anything it's suffering from as of today, but because Google's cloud business did not necessarily perform up to what analysts was expecting, Amazon will be reporting later this week or tomorrow. I'll check the calendar before the end of this episode. Amazon will be reporting, and because Google actually underperformed in the cloud side of things, the market is actually feeling that Amazon might also report a very lighter or less net income, or even on the top line on the cloud side of business. AWS is the largest cloud business in the world, cloud company in the world, and Google underperforming is not necessarily a bad thing for Amazon, but because they are actually competitors in that side of things, investors and analysts are actually worried that is there a material weakness in the demand for more cloud services. But we still believe AWS will outperform on both the top and the bottom line, and Amazon as a business is better run in terms of the cloud side of the business. Is better run compared to what Google Cloud platform has to offer. So Amazon is an outperform rating with a buy. We believe this stock should actually finish the year in the region of $350, and on the very ambitious side, maybe close to $400 per share. Let's see, because if you look at the 6-month performance of Amazon, it's been very, very positive, over 40%. Year to date, Amazon is still very, very positive, about 6%. In the last 1 year, Amazon actually outperformed the likes of Apple, the likes of Alphabet, and even the likes of Uber over almost 40%. In the last 5 years, Amazon actually has that track record. I don't even want to go to the all-time high, which is over 194,000%. Now, let's go to the surprise mega cap stock of the day. And it is yours truly, Walmart, ticker symbol WMT. Walmart is a wonder to behold, especially when you look at the track record of this business. If you look at the valuation of this business, the market cap of this business, vis-a-vis the likes of Target, vis-a-vis the likes of Home Depot, or even a whole lot of grocery providers in the US, Walmart is a performer. This business is having the highest valuation, highest forward earnings, because Walmart has a history of beating every estimate, of coming up with some of the best outlook. Now there's a tailwind for Walmart, especially in this period that we're in, and the real tailwind is that should inflation continue to go down, should inflation continue to see a downward movement, Walmart has what it takes to finish this year on a very magnificent result. So let's look at the last 1 year of Walmart. 81%, over 80%, which is quite impressive. If you look at the 6 months, you could actually see that it's over 50%. In the last 1 month alone, Walmart has netted over 12% return. So when you look at some of these charts, it's not necessarily because the chart is looking very green and the company is very positive that's just because the company is doing well, or the stock is just appreciating for nothing. The story behind Walmart is that Walmart stands a chance to do better, whether there's a tariff war, whether there's a trade war, whether there is lower inflation. And that's why Walmart is the winner of today. All of the mega cap stocks that we've talked about today, from Apple to Alphabet to Uber Technologies to Amazon, all have a buy rating. Like I said, Google is a buy with a market perform. Uber is a buy with a market perform as well. Amazon with an outperform, and also Walmart will actually outperform its peers. The likes of Target do not necessarily have what it takes. Even Costco do not have what it takes to outperform Walmart, and that's why Walmart has the highest PE ratio and mega cap market cap compared to its peers. I also believe that in the next 2 years or less than that, Walmart will be the first grocery company to hit 1 trillion market cap. On that note, we thank everyone. Thank you for watching. Please, if you haven't subscribed to this channel, subscribe to our channel, put on your notification bell, and please, we want you to also join our community on X, because that's where we have all the breaking news for you, everything going on in the market, blow by blow, report, breaking news, analysis, earnings report, even microeconomic data, and all the insights that you need to make the right decision and keep tabs with your money and your investment. So please join our community on X, Stock at Him Live, at Stock at Him Live on X. So thank you so much. Till we see once tomorrow and also Friday. Please keep investing, keep growing. Thank you. Take care and bye bye.